Good morning, everyone. It is Tuesday, June 5th, just after 10 a.m. Eastern Time. First of all, I'd like to thank everyone for their well wishes. It was probably the most inconvenient time for me to get extremely ill, but fortunately I did. Once they did some blood tests, what actually had happened was I had contracted somehow a very nasty staph infection, which had managed to get into my bloodstream, of course infecting the appendix and causing it to burst. But the good news was that I did manage to get into the hospital. Everything's taken care of, and now I'm just mending from 4 stab wounds in the stomach. But again, I really appreciate everybody's well wishes. I'm feeling much better, and I'm getting back on the saddle here. And as I said in my email yesterday, I will be answering the phones and getting through the email and the tickets that you've submitted as quickly as I can. When I just have to take a break and go rest, then I'll go do that. But just know that I am here. I'm back at my desk. If you need to call, go ahead and pick up the phone and give me a call. I'm here ready to answer your questions. Now, let's jump in and take a look at the markets here. Let's zoom out. Remember, we're looking at a long-term trend up here. Really since 2006. You can see the pound has had a very nice run, although the pound is starting to run into resistance here at this $2 level. You can see that late in 2006 it had some trouble getting through, and then even when it did manage to break through, it fell down fairly quickly. And it's right back challenging the level now, but overall you can see that the midterm was starting to move sideways. In fact, the midterm was sideways as far as trending was concerned, all the way from looks like the December area through March, April of this year, when it finally started to break out. So midterm, the trend is back up. Short term, the trend is back up. Long term, the trend is back up. So I'm not looking to take counter trend trades in this area quite yet. If the market does manage to settle back down, then I'll look to take some counter trend trades. But you can see here that we've got the market going to higher highs and higher lows, meaning that the trend is up. What I'm looking for now is going to be some kind of either pennant pattern or some kind of flag pattern coming down off of this last push up. We saw a very good pennant pattern form on the week that I was away here after the market pushed into this resistance area. That was actually what I was talking about at the end of that particular week, was to watch out for a flag or a pennant pattern. And we're going to look for the same thing here, a flag or a pennant as the market starts to form up, indicating that we've got a possible break to the upside, a possible break to the downside. But in our case, I'm only looking for a move to the upside after this pennant pattern does manage to form. I'm also looking for a break above this level here. So if the market does get above the $2 level, I will be taking a long trade with a stop just below 99.75. So keep this in mind. I'm going to be going long above $2 with a stop below 1.9975. That's a 7. And in this case, I will be looking to let the thing run a little bit, just because I think if the market does manage to get above the $2 level again, we'll see a nice run as traders get their enthusiasm going. So again, I'm looking for a pennant pattern to form up. Of course, I can't give the levels I'm looking at because it hasn't formed yet. But if the market does break above this $2 level, I think that'll be a good trade to the upside. I'm going to be stopping out below this 99.75 area. So long above $2, stopping out below 99.75 and looking to let the thing run a bit.